So welcome everybody. Alex Aben here coming at you on our Thursday international agency call. We got a few other guests plugging in, so we're excited to serve you all. All right, so anyway, I was talking to my buddy, Don. I said, hey, Don, are you using your office Thursday morning? Say around 10 o'clock, between 10 and 11. He said, you know, by the way, I am, it's open. So I said, dude, can I broadcast my national webinar call from your office? And he said, sure. So here I am broadcasting from the Oval Office. And we're very excited to come at you. I know it's getting crazier and crazier every week, but hey, man, if I got the technology to remote broadcast from the White House, I might as well use it, right? So that is it. That's the Abuyuan Financial Group leaderboard and our base shop. So we did pretty decent. So let's talk to Mr. Shilio, see if Vinny, if I can find Vinny and unmute Mr. since he's number one.
You still got me?
Yeah, I do. Okay. So Vinny, talk about your week, dude. You kicked butt this week. Talk about how your week unfolded and what policies you're able to write. Vinny's out in New York, right? So only has 3 companies he can write with. Okay, he doesn't have access to all 15, but he still manages to do great. So talk about your week, man.
Sure. I started out on Friday with a mortgage protection lead, and I wrote the husband and wife. They just wanted a 15-year term, even though I went through reasons why that might not be suitable for them, because they were going to certainly outlive it. But they wanted a 15-year term, and I wrote them a 15-year term. Sometimes you have to do, what they want. I mean, you always have to do what they want, but
yeah.
Sometimes they don't see the value of permanent insurance. So,
right.
They said we were just going to be 15 years, and then we're going to be moving out of here and whatnot. So once the kids are grown, and et cetera. So I wrote them a 15-year term each, and sent that in.
How old are they? How old were they, or are they?
Actually, 56 and 50, actually, 56 and 50.
Okay, and their mortgage?
56. What? Mm-hmm.
And how much was their mortgage?
The total mortgage was $420,000.
Okay, so
they had some coverage through their jobs, and they don't plan on necessarily retiring before then. So even if it's not portable, they'll still have it. So between what they had at work and the additional that I wrote for each of them, I wrote $100,000 for each of them. That was sufficient for them.
Okay. Awesome.
Sometimes you don't cover the entire amount of the mortgage. Sometimes you just cover a portion of the mortgage. Whatever the client feels is warranted. You can only guide them and suggest things. In this case, they felt comfortable with that. I don't do a lot of term, as you know, but they wanted it, and they wanted it just a 15 years. So that's what I did for them.
And that's Foresters?
That's Foresters, yeah.
Mm-hmm. Okay, awesome.
It's the only term we have in New York. So.
Okay. So, so the rest of your, talk about the other, what else did you run into last week?
So then I had one on Monday evening. It was also a mortgage protection for a husband and wife. They were around the same age. Husband was a little bit older. He was 63. And the wife was like 51. So we looked at, again, what they had, and they both had a little something. The mortgage wasn't that large, so we were able to do an additional $40,000, and we did smart UL. They did not like term once they understood how it worked. They wanted, in fact, the husband's got a term. He's got an increasing term with AARP, which he had no idea was an increasing term.
You mean increasing premium?
Increasing premium term, yeah.
Yeah.
Yeah, so it goes in brackets every 5 years.
Yeah, that's bad.
Yeah, but he had it, and he wasn't looking to replace it. He just wanted to add on something permanent. So we did him another $40,000 on a smart UL. And we were doing both the husband and the wife. And when it came to the payment, the wife was really spooked about doing an EFT, a monthly EFT. So she said she had her account compromised 3 times, and that she doesn't let anybody go in her account, not even the federal government. So to send me a check for my tax return. So she wouldn't go that way. I tried to assure her that it was secure and that I've never had anybody's account compromised in this business. And the carriers are very careful with that, with her information, but she just would not do it. So she said, I can't do a quarterly because you can't do monthly with a direct bill. You have to do quarterly, semi-annual, or annual. Mm-hmm. So she opted for quarterly, and she said, well, I can't do both then. I'm going to have to just do my husband. And once you get that taken care of, then you'll come back and we'll do mine. So it's kind of staggered, with the payments.
Okay.
So I would have had another one. And I will have another one, just it probably won't be for another week or so.
You could now, okay,
that was how that one.
So you couldn't like set her draft date to be a different date? Oh, that's right. You can't do EFT.
It's a draft. It's not a draft date. She said, I don't have that much to put out in one shot on a check right now. So I'll do it 2 weeks down the road or whatever, once to take care of my husband.
Yeah.
So at least it's not paying all at once there.
Yeah, I got you.
But I mean, it's going to be that way. Well, it'll still be staggered because there'll be different dates that they will be approved. There'll be some time in between. So their direct bill will be coming staggered as well, probably like 2 weeks apart or so. So I guess that worked for them. Again, you have to be flexible, and you got to do what the client wants, and that's what she wanted. I told her 99.9% of all my apps are EFTs, and it's a no touch. You don't have to worry about putting it on the table when the bill comes, and it goes under the newspaper and goes in the recycle bin, and then your policy lapses. I tried to show her, hey, this is a no touch. It's much easier, and it's secure. But she would not have it. So,
well, you know what, and that's what I tell agents. If you ever have to be a salesperson, like a hard closer, the only time in our business where you really need to turn that on, if you got that gene, if you got that muscle, is when you sell the EFT. Because here's why: the EFT, monthly EFT, is the most persistent form of payment. The worst form of payment, even beyond annual, semi-annual, is quarterly. So anyone on quarterly, the likelihood of them lapsing their policies shoots through the roof. And that's why. It's because it's like Vinny said, you set it and forget it. And but if you put on quarterly, they got to think about it every time the bill comes in, and then they got to come up with the whole 3 months, a premium at a time, just harder to budget for. So that's why it's the worst form of persistency. So, I definitely, I know you got to turn up the jets when it comes to trying to convince them that everything is going to be all right. But, you're going to have those few that, like this lady, man, staunchly against it. But I remember back 19 years ago when we were first doing this, we had more people against it back then. But now people are starting to accept that that's how you do business nowadays, but there are some people still. So the other thing too is that when you do EFT, monthly EFT, you get your full 75% advance of your commission. When you go quarterly, then you get paid as earned. So every time they make their quarterly payment, let's say it's $100 a month, so it's $300 a quarter, then you get your commission every time they make their quarterly payment, and it'll go as earned. So you'll get commission 4 times in the year, every quarter, once they make their payment. So your commission gets put on as earned. So that's another feature, I'm not going to say advantage or disadvantage, but the other feature of quarterly. So anyway, yeah, I know you, Vinny, and I'm sure you did all you could, but hey, man, sometimes
You got that. I did everything I could, and obviously I'm aware of both of those circumstances that you just mentioned. And, you know, sometimes it's the difference between, you know, compromising, if you want to call it that, with a client or losing a sale.
Yeah.
And I know there's a second sale there, so, you know, I did what was right, and I gave them what they wanted. You know?
Absolutely.
You have to do that. You know, I'll always do what's best for the client,
Right.
regardless of the situation of my commission, or if I get less, or if I have to wait for it, or whatever it is. Always do what the client wants. That's how you continue to write business. If you fight with the client, and if I would have said no, you got to do EFT, I would have walked out with nothing.
Right.
So
exactly.
yeah. Okay. All right. And then on Tuesday, I had 2 appointments. One in the morning with a young man. Say young man, 32 years old. He bought his first house. So you don't see many 32-year-olds buying their first house.
I know.
You know? So,
I know.
yeah, he's doing really well for himself, and I told him that. I said, really, I admire, you know, your maturity level and your responsibility level as a young man to be able to buy your first home. You know, has a good job, and he's done everything himself. You know, his dad passed away when he was young, and he had to grow up sooner than later. You know, so
yeah.
And we went over, you know, mortgage protection for him, and we wound up doing a $250,000 smart UL. He really liked the idea of not only being able to cover his mortgage, because he's such a young guy, a term you surely would have outlived. You know, even a 30-year term is going to be in his early 60s with average life expectancy at about 80. So, you know, he certainly didn't want a term, and he really liked the cash value accumulation feature of the UL, and he opted to overfund it as well, so that not only will he have his mortgage covered, and it will, if he outlives it, which I'm certain he will, he's going to have quite a large amount of cash value there to supplement his retirement income tax-free. So he really liked that. He's a smart guy. Like I said, he saw the value of it, and he went ahead and did a $250,000 smart UL for his mortgage protection.
Yeah, that's awesome,
Which
dude.
I tend to write more. Yeah, I tend to write more ULs for mortgage protection than term, actually. A lot more.
Yeah, I love that.
Yeah.
And what kind of cash value were you looking at for him, like say out towards 80, 65, 70?
Oh, when he was going to have about, because he's overfunding it, he's going to have about $200,000. He's actually going to surpass, and his policy is going to start growing at about 75. He's going to have $250,000 in cash value, and his face value will start to grow at that point, because obviously the insurance carrier is going to buy some additional insurance, so it stays non-taxable to him when he pulls that money out.
Yeah.
Otherwise, the government will come in and tax him. So that was a great appointment, you know, for a young guy like that. I really like to see that, you know, somebody that young that has their act together, and I'm able to help them not only with their current situation with their mortgage, but for their future. So
that's awesome, dude.
That was nice.
You probably created some great rapport with him, you know, just because you showed him something of way more value than just a term policy, right?
Oh, absolutely. Yeah, he was fired up about the cash value. He's like, I asked him, as I always do when I leave the home, do you feel good about what we did today? Yes, absolutely, man. Look at all that cash value I'm going to have. So I said, yes, you are. And I said, you see any reason that you won't be able to keep up with those payments? Is this comfortable for you? Because that's the most important thing. It's got to be comfortable for the client. And if they hesitate in any way, I'll stop and I'll sit right back down and go back to the drawing board. I said, then we didn't do the right thing for you. But no, he was very comfortable with it. He actually overfunded it. And it worked out really well. So if all appointments went like that, boy, things would be nice. Better anyway. Better than they are. So I got one other that I did that evening, and this was a guy that I sat with originally back in March. He's in his early 50s, and he had quit smoking about 6 months prior to when I sat with him
Oh,
originally.
wow.
And I said, well, James, I said, I hear you. And I said, I'm really proud of you. I said, that's awesome. But you're still considered a smoker in the eyes of the insurance world. You got to be 12 months. You got to be, no nicotine products for 12 months. And he said, okay. And we looked at, I showed him the smoker and the non-smoker rates. And I said, well, we could write you now, pay a smoker rate for a little while. We were looking at a UL, so we can certainly change the smoking status on that once it's enforced for a year. And I said, if you want to get covered now, if that's a big concern to you, then we'll write it for you now. You pay a little more, and we'll get you to, in a year, we'll get you knocked down. Even at a year older, as a non-smoker, you're going to pay a whole lot less premium. And, he contemplated it. He had a hard time, with the smoker premium. And he said, give me some time. And I said, okay, and I knew that he really needed to think this through. So I gave him space, and I followed up with him about probably a half a dozen times in the last, once a month. And his anniversary was October 2nd of his 1 year of non-smoking. So I said, so James, congratulations, you've actually made the year. I said, so are we ready to sit down and relook at this? And he said, absolutely, come on down. And I wound up writing him a smart UL for $100,000 as a non-smoker. So, and that was for his mortgage protection as well. And his daughter came running back in because she sat with me and her father on the original appointment. And she had just come running in, and she said, wait, don't leave. You got to take care of me too. And I said, Charlize, I certainly will. I said, you want to do it right now? She goes, how long is it going to take? I said, probably another hour. I said, go back inside. We'll go over everything again because I got to refresh your memory and kind of looked at some options for you. And she said, well, I don't have that much time. I got to run again. I told her we could do it really quick. She says, I said, let me take care of your dad. When I call and tell dad that his policy has been approved and issued, congratulations. I'll ask when you're available. I'll come back down. We'll review dad's policy and we'll take care of yours. She said, that's awesome. And I said, okay, done deal. And that was my week.
Oh, that's awesome, dude. I love it. I love it. So, well, since we have you on right now, one of the themes I was working on what I want to talk about today was proposal options, winning proposal options. It's great when you can move the client through finding their, building bond rapport, finding their pain, telling them what's going to happen next. Then the next part we call the fulfillment part, which is fulfilling your promise that you're going to show them something that is going to help take care of them. And so the show them something is, the 3-option close or different options, not too many, but enough around their budget, they can find something that will work. And one of the reasons why I wanted to have Vinny I want to talk to Vinny about it. I've got a couple other agents in mind that I'm going to talk to, but I want to talk to Vinny because his approach on universal life is like awesome. And it's not for everybody, but it is for a lot of people if you explain it properly. So like I said, it's an important part of the process of taking care of a client is offering them enough options or the options within their range that they can afford once you've established the value in their mind. So I'm going to write stuff that you're saying down so we can share it with everybody. So give me just a second here, Vinny. All right, so I got my high-tech my high-tech leader, my high-tech thing. Actually, this works way better than that electronic one. So Vinny, talk about in your selling situations where you've been able to take care of clients, like so tell me first, as I mentioned, you like doing the smart UL, so go into how you set them up to show them universal life options as opposed to just straight up term. Like, what do you say to them that gets their minds open to seeing something that might be more expensive per month, but they would consider more value?
Sure. Well, the first thing that I do with all my clients, obviously, is bond and rapport. As you mentioned, that's, they have to trust you and they have to like you, or they're not going to buy anything from you. That I'll spend a lot of time on. Sometimes I'll spend an hour before I even open up the ATM and just talk to them. And, that to me sets the stage for what's to come, because if they trust you and they believe in you, that you're going to do the right thing by them, then they're more likely to listen to what you're going to say. And the second thing that I do is I'll explain the different types of insurance to them and how they work. I'll ask them, so do you know what a term policy is? A lot of these leads, come in, or an internet lead or whatever, and it's just term, it's for mortgage protection, but it's term. Or they just say term insurance, or whatever. And I said, do you understand what term insurance is? Well, not really. I hear the word term all the time, so life insurance is term. But it's not necessarily, I said. There's term insurance and there's permanent cash value insurance. And let me take some time to explain that to you. And I'll go through the different types of insurance and how they work. But once people understand that only 2% of term policies are ever going to pay a death benefit, and that there's no cash value, there's no non-forfeiture options, there's nothing. When it ends, it ends. And I like to use your analogy of the renting the apartment versus buying the house. Lifted that from you.
Thank you.
Oh, hey, listen, that's the greatest form of a compliment, right? So,
Rip me off.
It works. It works. And once I get them to understand all of this, no, I don't want term. That's what I usually get. Like I said, this week I had gotten one that they had a reason. They just wanted it for 15 years, and they had a game plan, so to speak. They knew what they wanted. They weren't interested in anything more than that, and that was fine. But generally, my clients will say, hey, listen, I really don't want term. I want something that's going to be there. It's permanent. And they like the idea of having some access to cash value to use tax-free for their retirement once their mortgage is paid off. And the other thing that I use that helps sway them away from a term is, well, let's look at the numbers, right? We'll have a term, say you need 20 years, you have a 20-year mortgage, you need a 20-year term, you're going to pay in this amount of premium, and you're going to be, 70 years old or 65 years old at the time of the end of your mortgage, and you're going to have no insurance, and you're going to need to find insurance at a much older age, and it's going to cost you a whole lot more. And then maybe there's some things that may come up in your health that you might not even qualify. So then I'm thinking that, hey, they want something more out of the insurance than just to cover that debt over a period of time. And then I'll also say to them, listen, think of it this way. If you finish your mortgage in 20 years, let's look at how much you would have paid in on a universal life and what the cash value is. And generally, depending on their age, after 20 years, they probably have around what they paid into it, maybe a little more if they're younger, maybe a little less if they're older. But I said, it's a way of getting a return of premium, which we don't offer here in New York. So it's a way of getting your money back and getting your mortgage protection for nothing. You have to put a little bit more out up front, but if you're comfortable and able to afford to do that, it's a much better scenario for you. If you just want pure mortgage protection, you're not interested in having a policy that's going to be there permanently, you can do the universal life, cancel it in 20 years, and get your money back and have your cost of insurance be little to nothing. Or you could pay $20,000 for a term policy over X amount of years and get nothing for it. So that kind of gets the wheels turning for them. When they start thinking of it in those terms, it makes a whole lot of sense to look at universal life as opposed to a term policy.
I love it. So when it comes down to, okay, so let's take the scenario of someone who now they say, I like it. I like this thing you're talking about, this cash value thing. Tell me how you lay out the options for them Is it just sort of like, okay, so here's an example, this is what it would cost, this is your cash. You sort of kind of hit around like what it would look like for them. How do you start that process of showing them their options for someone who's interested
Right.
in
So
insurance?
no, go ahead. I'm sorry.
No, for someone who's interested in permanent insurance, how do you start the process of showing them their options?
Okay. So obviously, before you get to running any kind of numbers, you have to understand what their situation is, right? There's a whole discovery phase. Once you do the bond and rapport and you get into about them and you find out, what their situation is, how much is their mortgage, what are their salaries, what is their situation, do they have any other insurance? And then we kind of come up with, with needs, like who brings in what in terms of the house, in terms of income into the house. If it's a couple, a spouse, two spouses, how much do you bring in? We'll use Joe and Mary because those are your favorites. Joe, how much do you bring in? Mary, how much do you bring in? It's 60-40, it's 50-50, it's 100-0. And then we say, okay, so we determine who needs to be covered and then how much coverage would be appropriate. And I'll always give them a range of, we'll start at this, which, maybe it's 100,000 or whatever. We're going to look at 100, we're going to look at 125, we're going to look at 75. And we're going to start thinking about what's comfortable for you in your budget for insurance on a monthly basis. What can you absorb comfortably and not put a strain on your finances? And then we'll run the numbers, and then I'll turn around and I'll hand it to them and I'll say, okay, which one of these would best fit your situation? And remember that something's always better than nothing, even if it's not as much as you would like. Something is better than nothing. And if you got a $75,000 tax-free check to your beneficiary, would that help pay down that mortgage and make it affordable for your spouse to live in here? Would Mary be able to live here if she had $75,000 to put to that mortgage and refinance that mortgage? And then, then they make the decision. They'll say, okay, I'm comfortable with this. And I said, great. Okay, let's get the paperwork out and let's get it done. And that's pretty much, the way I go with it. And if they hesitate and they hem and haw, then I say, okay, maybe we're not looking at the right numbers. Maybe we got to go a little lower. Let's look at 50,000. Or hey, I'm okay with this stuff. Maybe, and I'd like a little more coverage. Well, let's look at 150,000. Whatever. Once you determine what they want, what their needs are, and a ballpark number that they're comfortable with, then you can slide up or down on the scale. And, whichever way it is, I'm not going to argue with them either way. If they want 50,000, I'll write 50,000. If they want 150, I'll write 150. It's got to be comfortable for them. And then before I leave, I ask them, are you comfortable with this? Do you feel good about it? And are you comfortable? And as long as I get yes on both of those, then I know I did the right thing.
Yeah, the post-sale, making sure they're comfortable. Here's a...
oh, that's very big. Yeah, very big.
Huge. Okay, so let me contrast that with what some agents do, is they put together like this complex matrix of options where they have like 9 different options. And then, okay, and all of a sudden the client's head's like spinning, going, oh my God.
Yeah, you confuse them.
Totally. Yeah. That's why I like what you said, the 3-option close, is it starts the conversation, and then it tells them that you can go higher or lower, but you're starting there. So the words you use is important. So let's just start here. Let's start here and figure out, which one's going to fit your situation. It starts a conversation. Now, here's what I love about that, Vinny, is that because you spent time getting to know them at the beginning and creating trust and creating that rapport, even up to an hour spending time with them, then when you lay it out, they feel comfortable telling you. They don't feel embarrassed. They don't feel like you're judging them. They don't feel like you're trying to close them hard. they feel comfortable saying, you know what, can we do something for less than 75,000? They feel open enough to ask you that question versus no bond and rapport, no trust, and then, you know, they don't believe you, so they don't know if these options are even good options, right? Does that make sense, Vinny?
Oh, absolutely. And, you know, what always boggles my mind is when I hear agents that are running 10 appointments in a day. I'm like, how could you even write a policy? What do you spend? 15 minutes in the house? Yeah, how did they even know? How can they even trust you or know you or you can get to know them and figure out what their needs are in 15 minutes? Because I got to run to another appointment. I don't book, you know, more than 3 appointments in a day because I might spend 3 hours or more, you know, in an appointment. But, you know, if you have a higher closing rate because you spend more time with them and you build a bond and rapport and you find out what their needs are and you satisfy those needs, you're gonna close more and you're gonna sell more, you know, policies. I can't imagine how anybody can even write a policy in 15 minutes. You know?
Okay, now guys,
it blows my mind. And there are people that do it. I don't know how they do it, but that's not the way I work. I can't work like that.
okay,
But
now
this is what
gang,
works for me.
please understand where Vinny is, okay? Vinny's selling in New York, okay? New York City.
Yes, I am.
Okay, so like I know, like my daughter lives in Harlem, and she's lived in New York about 2.5 years. And so we've learned when you're walking in New York City, like really fast, you got to walk fast. You don't stare at anybody too long, right? You just kind of go where you're going to go and don't mess with anybody. And maybe I'm overstaying a little bit, but when I watch my daughter Zoe walk through New York City, we're trying to keep up with her, and she just like head down and she just moves forward. So like the Northeast in general, whether you know you're in Boston, Massachusetts, to New York, there's that little bit of that, I don't know what you want to call it. And so by Vinny spending that time, he's learned that that natural New York thing, or I don't know what you want to call it, that skepticism of, okay, like who's sitting in front of me? Is this just a salesman trying to, you know, trying to take me for whatever? And so Vinny does a great job at fertilizing the relationship. And before long, however long it takes, he gets the right feeling. So tell me, how do you know, what makes it click that you really got them from a relationship perspective that allows you to move on with the rest of the appointment? Is there something that happens, or is there a feeling that you get?
Well, you know, when you walk in the door, right, these are people that you've never met. They've never met you. And as you said, you know, they look at you as a salesperson. First thing you have to do, first thing I tell them is, I'm not a salesperson. I'm a business owner, and I work with different carriers. I'm not pushing anybody's agenda. I'm not, you know, selling you the flavor of the month or what the insurance company wants to sell you. I'm going to do what's right for you based on your situation and what's going to meet your goals that you have with the insurance and you know, satisfy your needs. So, and I'll have different carriers that I can look at and different products that we can look at. And that's, you know, kind of how I set the stage that I'm not a salesperson, that I'm not a dime a dozen, you know, flavor of the month guy. And that usually puts them a little bit at ease. And then I'll start, you know, just talking to them. So, hey, you know, tell me a little bit about, you know, what you guys got going on, what I could do to help you, what you have in mind. Okay, this, that, this. And we'll go through a few different things. And then, you know, I'll ask them a lot of questions about them. You know, I make them the stars. You know, the less you know, talk about yourself, the more you talk about them, the more they're going to like you. People like to talk about themselves, like to hear about themselves, they like to hear their name. So you make them very comfortable, you know, and I'm very genuine, you know, and people see that. You know, people, I walk in the house and, you know, people have pets. And pets are much smarter than people when it comes to judging a person. And they come up to me and they love on me. And they're like, wow, I never saw anybody get a reception like that from my dog or my, you know, or my cats usually go run and hide in the other room. They're climbing up on you. And I says, well, you know, I said, for whatever reason, I said, animals have a sixth sense. They could tell if somebody has a bad bone in their body. So I said, they like me for some reason. I must be doing okay. And I make them laugh a little bit.
Me
We have
too,
fun.
man.
We joke around.
Me
And
too.
then, you got to, listen, if you go in there and you're all serious and it's work, you got to make it fun for them. Hey, listen, we're going to have a little fun here. We're going to get to know each other. Hey, we got a lot in common, you find things out, and then you build off of that, and you find out, how they met and what they got going on. And they love that stuff. And, you could usually tell if you're clicking with them after a few minutes. And if you're not, you kind of know that I got to work a little harder, and it may or may not pan out. And some people are just stone-faced, and they're hard to read, and you're not getting anything out of them. Sometimes they're just drinking it all in, and they're making a judgment on you, right? And saying, okay, well, all right, I've heard enough. I either trust this guy or I don't. And, you don't have any really control over that or way of knowing, because some people are very good at covering their feelings up. Other people, right away, hey, we're laughing and joking, you clicked right away with them. So sometimes you got to work a little harder, and, it doesn't necessarily mean you're not going to close. It just means that you got to work a little harder. And sometimes you're going to close it, and sometimes you're not. If they made up their mind, they don't like you, or there's something, they never really had an interest in the beginning. They really didn't want to set the appointment. They have to have, as you said, the elements of a righteous sale. They have to want it. They have to need it. They have to be able to afford it. They got to qualify for it. Once you know all those things, that's great. But
here's one thing. I'm sorry. There's one thing for sure, Vinny.
No, go ahead.
One thing for sure. I've never closed anyone. Like, here's the most common thing of why I don't close people in my 19 years is I just did not click with them. They did not click with me. No matter how hard I tried to develop a rapport, because I've never closed anyone that I didn't have some kind of relationship with. But for sure, if I didn't get it, and no matter what I did to try to get it, I was not going to close. If 90%, let's say 80% of the time, it's because I didn't click with them. They're just something, they wouldn't let me. Sometimes they wouldn't even let me in. They're just some people, dude, like you said, they just won't let you in. And like emotionally let you in. I'm in their house, but I'm not in the relationship. And so for sure, I know I'm not closing. So I know that for sure. So that's sort of another way to say it, but absolutely, dude. Keep going, man.
Yeah, sometimes you can stand on your head, Alex, and like you said, it's just not clicking, and they're stone cold. You're not going to close. Okay, hey, you know what? You can't close everything, right? And maybe it's just not the right time for them. Maybe, sometimes you leave and you say, hey, here's my card. Give me a call if I can help you or anybody, Sometimes you get a call. Usually not. Because if you don't, like you say, if you don't do it then, it's very difficult to come back. But I've come back on quite a few since I've been doing this and closed. Well, like the guy, the non-smoker, the smoker versus the non-smoker. 6 months ago, and I come back and I write him now. So, and we did click though. There was a bond and rapport.
Right.
He just wasn't comfortable paying a smoker premium. So,
exactly.
But yeah, you gotta go through it. And you gotta do it, and that's it. And you gotta tell them again that you're not a salesperson. That you're here to help them. You reached out for me. I'm here to find out what I can do to help you. And that usually sets the stage for going forward and asking the questions and getting to know who they are and letting them know who you are. So you got to know a little bit about me, right? And who I am, who I work with, the companies that I write business with. And once we get through all of that, then you can get to the meat of the appointment, and start looking at, some options. But I don't ever go on to that point until I'm comfortable or until I know that there's nothing I'm going to be able to do is going to get this person to come around. So then I'm just going to go right to the business piece of it.
Yeah.
And sometimes it works, sometimes it doesn't. But that's how I approach it, and had some pretty good success with it. You don't get them all, but if you get the majority of them, then you're doing okay.
Dude, okay, so in my 19 years, my best closer was closing 7 out of 10 sits. And this guy was like top of the leaderboard. This is like maybe he was with us for like the first 10 years of the company. And he had some personal issues. That's why he got out. But he was our best closer, consistently top of the leaderboard, like Michelle Alleman numbers. And I tracked him for 3 months. I tracked a number of agents for 3 months, all their numbers, closing rate, booking rate, and everything. And dude, he was the ultimate in relationship building. He would ask a lot of out there questions to build rapport with people. And he was in Colorado, so maybe you can get away with a little bit more. I mean, he asked just some really, personal, and he was getting people to open up to him. So he's one of these psychologist type of personalities. He wasn't a psychologist. He was like this touchy-feely, feel-good guy that honestly no one could reproduce his appointment because it was so, I can't even hardly explain it. And he was the best closer at 70%. So I think, my opinion, that our lead system is at least as good as 70% close rate with the people you sit down with. The 30% are the people that don't deserve to be clients. These are the people that you won't close no matter, like Vinny said, you stand on your head all day with them. They're not going to close. They're not going to buy, right? But the 70%, I think, and that's the magic number, I believe, 7 out of 10, and you're rocking. Now, here's the other thing about Vinny. I love the way he hedges his bet is that permanent policies have a higher persistency rate than term policies. The term policies, if you kind of separated whole life and permanent policies from the term policies, I promise you the retention on permanent policies is much higher than term. So Vinny's not going to run into those type of issues where people cancel like they do on the term. He's going to have more of his policies stay on the books. So any last...
Also, Alex, replacements, in New York, it's cutthroat. Everybody does full med term, and they're all looking around to cut each other, and they actively pursue replacements. They'll go out and replace your term policy. And we do mostly non-med, so it's easy to replace a non-med term policy with a full med term policy. If you can convince the clients that this guy, he made you pay too much. Look, you can get this. And they may or may not work out. As you know, only about 45% of full med gets placed, and it's an arduous, process to go through.
Yeah.
And they may get rated or declined. So, it's not necessarily the best thing for them, but these are salespeople that don't care, that just are looking to make a commission, and they will go out and they will steal your business. I don't go out looking to replace anybody's business unless the client's in a horrible position. Then I would consider replacing. Other than that, I don't believe in that. I don't think that's ethical. Yeah. But that's something else that you got to look at. So, you have to take everything into consideration.
Absolutely. And here's the other thing with Foresters. When you compare term or whatever term they might even have, the living benefits for the chronic illness, critical illness, and terminal illness with the Foresters products really is of value, but it is of more value if it's a permanent policy, right, Vinny? I mean, like, let's say you write a 15-year, 20-year term, that's all well and good to have those benefits, but when those benefits end, when the term ends, and then they get older when they need it, well, then what value is it to have those living benefits, right? So on a permanent policy,
exactly.
The permanent policy is where it totally makes sense to have the living benefits, right?
Yeah. Just going back to the closing, rate for a second, like I said, there's that percentage of folks that you're not going to sell no matter what. But I find the other ones that I don't sell are because they don't qualify. I don't have a guaranteed issue. If I had a guaranteed issue in New York, I would have put another probably $40,000 in issue paid on the board right now.
Dude, I know.
Easily.
And I think,
and those break my heart because I can't help these people and my hands are tied. I don't have the product to help them. But you can't do everything. And the other ones that I don't close are it's strictly they can't afford. and
Yeah.
it doesn't make sense to get, nothing. So those are the two scenarios that I don't, other than the people that you're going to stand on your head. The rest of them, I will help those people.
Yeah, absolutely. Yeah, but dude, I wish New York allowed us, because it's usually because of the state regulations. Certain products are not allowed in a state. Sometimes even certain riders aren't even allowed to be offered in a state. Like disability rider is allowed in some states, but not others.
Don't have it.
Yeah, guaranteed issue is another case where only certain states allow that type of product to be sold in the state. Just crazy rules. Anyway, but trust me.
But there are guaranteed products available in New York, Alex. There are other carriers that offer them. There are guaranteed issue products available in New York. There are other carriers that offer them, which is tough for me. So then I know there's other companies that can take care of these people. When we were in Hawaii, I asked Andy if we could do that. And he said, you thought about it. So I don't know if maybe one day he'll pull that out of his bag of tricks for us in New York. Maybe if we get a few more agents out here, we'll be able to do it.
Yeah. Actually, dude, here's why we have AIG. We have AIG only because the California agents are not able to sell, was it Great Western? Guaranteed issue. And I think National Guardian, when we used to have National Guardian. So that's how we came up with AIG. So why don't you send me an email with, some of the carriers that offer guaranteed issue in New York, and we'll see if we can pursue it.
Yeah. Okay.
All right.
All right. Absolutely. I appreciate it.
Hey, thanks, Vinny, man. This was an awesome call. I know I had some this kind of went down a road that we really needed to go down as far as relationship building. I can't emphasize enough. Understand where Vinny is, gang. Like if Vinny was in the South, in the Bible Belt, he'd probably have, but he has to work harder in New York. So you're talking to someone who has a harder chance in New York just because of where it is in developing relationships, and he's doing it. And so, man, if you just implement, what he's doing, not only will you sell more permanent policies and have a higher average premium per sale, but your persistency is going to go up and you're going to close more sales, right? So, hey, thanks, Vinny. I appreciate it, dude. You rock, man.
Oh, thank you for me, Alex. Appreciate it.
All right, gang. We're done with our time. We just kind of went over, but man, thanks, gang, for plugging in. We're going to get this uploaded so you can watch it later and really write down and study what Vinny's talking about. And then, man, rock and roll. Let's kick butt this week. We're getting October started. Great. So let's keep the momentum going. We're getting into the winter months where we have the highest production of the year. Typically is that September, October, November, mid-December timeframe is where we do our peak amount of production, even through the end of December. So, man, take advantage of the wave, get leads, go out there, knock it out. God bless everybody. Thank you. Plugging in. From the Oval Office. I don't know if the president will allow me to have his office again, so this was a very unique opportunity. Rock on.